So it looks like the stock market's kind of feeling good right now. They're getting a little bit of a bump in certain places. Yesterday, closing up quite a bit, all because of the country starting to get back to work a little bit. They're anticipating some of the opening up of the economy. But there's been a poll, as I understand, CBS did a poll, and they said 2 to 1. People are thinking that they're not going to go out and take advantage of things opening up. They're not going to be going to restaurants. They're not going to be going to the movies. They're not going to be getting on airplanes. So there's still a lot of worry about this. So we think about that for just a moment and consider what we've done as a species with uh, with shelter in place and quarantining, if you will. Actually, had a really interesting conversation this week with a client. Said I'm having a good quarantine. I never thought I'd put those two words together in a sentence, but they found it necessary to, which is kind of cool that we're living in an environment you can say something like that. But there was a study in 2009 published in the European Journal of Social Psychology that says it takes about 18 days to 254 days, somewhere in that range. It's a big range for a person to form a new habit. They also said the study concluded that it takes 66 days for that behavior to become automatic. So what I'm thinking here is we have literally changed human behavior with what has happened over this last 30 to 45 days. Humans have completely adjusted how they act. They've adjusted how they go about recreating, how they spend time around others. They adjust how they interact with others, keeping gaps between each other. I don't know how that's going to translate for the future. But what I do know is it's going to translate to people wanting to be in better quarters, right? So the real estate investor, I think, is very well positioned, especially those buying real single family residences, to have a better place for people that are now being, in a way, creating habits to stay indoors for everything, stay away from others. I'm hoping that people are going to start interacting a lot more, and it's going to be easier to do, but they have to break a habit. We're becoming a slave to habits. That's human nature. So that being the case, think about those things and how humans are going to react, and how I believe, this is my personal belief, that having real estate investments in the form of a single family residence are going to continue to capitalize. So going forward, we're seeing some new economic news coming out about the big earnings weeks for Apple and Amazon, Google, Microsoft. They're going to be coming out and see what's happening in those areas. The Fed's going to come out with their inflation numbers. The PCE is going to start popping out this week, give us an idea of what we're dealing with there. So I'm really curious to see what the inflation numbers are. I do talk a lot about inflation with clients when you look at places like shadowstats.com or the Chapwood index, inflation being much higher than what the Fed says. So I'm interested in what's going to happen here. When you measure the toilet paper index and how it's getting much more expensive to purchase such, that could be producing higher inflation. But if they don't measure that in the personal consumption expenditures, we could get a lower reading number as a result. The mortgage bonds. Let's get into what's going on there, because I know that interest rates are always the big topic. So I'm going to do another screen share here. I'm going to go into what is happening out there in mortgage-backed securities world, and well, let's go right here real quick. Let's go to jobless claims, because that's going to have a big impact on the market. That's what's going to drive a lot of things. We've seen the real estate market impacted heavily from 2008. Well, here was the jobless claims back in 2008, 2009, 2010. As we see, they kind of taper down. Then we have this massive spike here. Well, if you add these up, the collective jobless claims we add up, that's over 26.5 million claims over the past 5 weeks. That right there equals all that have been done since 2000, since really the crash. So it's kind of interesting for you to see that big number just in 5 weeks equals what's happened during the entire time that we've recovered since the downturn back in 2008, 9 to 10. That we pretty much wiped out that part of the growth. If you can kind of look at it that way, it's kind of interesting to consider. So 4 to 5 to 6 million claims a week is what we're seeing, and it's starting to taper down, which is good. But what a lot of those claims are ongoing. These are just new ones, right? So we have ongoing unemployment. 26, I believe, what I understand is 20+% of the labor force is unemployed. Big deal, real big deal. So when we're looking at the mortgage-backed securities market and what we've got going on here, this is what we're going to show for the last 3 weeks. But let's get actually in the last 3 months, let's just go into the last week. We're starting to see it kind of taper down a little bit. So we've been trading at a higher point after the Fed did what, start tapering back a little bit. They weren't doing that major surge in purchasing, which happened after the everything sold out. We had that massive crash in the markets. Fed started buying it all back. Then, as you know, we talked to Barry. Barry was the one who reached out to them with information to the Fed to get them kind of slow down, taper it off, and get more of a flat line approach to it. Well, in that, we can see that the Fed has actually even tapered back even a little bit more. They've purchased a little over $7 billion yesterday in mortgage-backed securities, but it still was a little bit less than what the demand was. So you can see we did have a little bit of a drop yesterday still. It was upwards of 10 to 15 billion previously. So with the Fed tapering back what they're purchasing, we're going to see a little bit of a decline here and there, depending upon how much demand there's going to be globally from other sources. We might see a continued decline. So that meaning that we may be in this lower trading range. We were in a little bit higher trading range before, now we're going to a lower trading range. What that does for you as an individual investor, let's say I quoted you right here. And you got quoted, closed out that day at a 106.94 was your close on the pricing that day. And let's say we went ahead and locked it yesterday. That, I'm going to go ahead and move this over. We closed yesterday at 106.31. So if you were quoted when it was 106.94, now we're at 106.31. As you can see, that's 63 basis points difference, right? So that would mean for the exact same rate that you were quoted to begin with, it would cost 0.5% or 0.625 more approximately, thereabouts, anywhere from a half to 0.625 more for the exact same rate. So that's how you can kind of translate to what's happening here, because it's still staying in the 106s, right? Still staying in that particular price range, but to get the exact same rate, you're still going to get you're going to have a little bit of a cost adjustment. Now, if it's the other way around, so if we quoted here at 106.22, and then we locked on this day 106.59, you can see it's going to be about 0.25% better. So if it cost you, let's say if it's costing 1/4 that day to get a specific rate, now it's going to be 0. There's going to be no points for that rate. So that's a little bit of a way to be able to understand how that works. So I wanted to make sure that we kind of went over that so you can keep an eye on it. You can see what day you received your disclosures, and it may be a 1 or 2 day lag because we may have created that document a day or so prior to being sent to you. And then you can look at the market here at the Mortgage News Daily.com/MBS and see what's happened since those days. Has it trended downward? Has it trended upward? You can check the price. That's a general idea of what would happen here. I can't say for certain every time it's going to go that way because we can see the market's not done as it's done in the past. Now let's take a look at where we've been as a whole just for these last few years. I mean, look at this claw back from 2018 where everything was at their worst, really in the last few years. Rates were at their highest. Late 2018, we've climbed back a lot, and we look at how much gain ground we lost in a short run, and then we got all that back, and we're back at the probably the best levels we've seen in a very, very long time. So just things for you to take a look at. I wanted you to share out with you. So this go ahead and confirms that the Fed is going to be purchasing a lot less going forward, going to have an influence on interest rates. So we want to be sure we gave you some of that to stare at, some things to consider as you're working on your business, and understanding is what driving the interest rates and how that equates to pricing. So checking in, see how you guys are doing with your daily disciplines. Have you started a morning routine? Are you getting your mind centered in some good habits? Because like I said earlier, humans are creatures of habit. You need to form good habits and become their slaves. What is it that the bottom line each property needs to perform? Don't be putting properties in just to put them in. Figure out the base model that it needs to meet. Interest rates are going to swing around. If you're really, really trying to focus on when is going to be the best time with the rates, you're going to drive yourself crazy. Trying to get the best of everything is like being a football player sitting on the sidelines, holding up that energy to be on the field for the highlight reel. The only people that are going to be on the highlight reel are the people in the field that are working, that are out there running the ball. They're on the field playing. If you're sitting on the sidelines waiting, you're never going to get anything happen. So get out there, get in it, make sure that everything that you're doing meets your bottom line criteria. Also, make sure who you're working with on your team. Tactics and strategies are going to change, but make sure they have the right principles and those principles endure. Are they helping you on your team? Are they hindering you? Are they there just for their betterment or for yours? Do they want you to become more educated? Do they want you to have a better outcome for your future? Are they interested in your real estate investment business? Or are they there just to close deals? You got to be cognizant of that. Um, and then make sure that everybody's principles match up. I do another quick reminder. If you don't have a master key system, get it. You need to get it. It's going to help you get your mind right. And then please help the charities out. Get them. Send me a picture. Fan them out. Send a picture. We're putting them out on the internet slowly. They're going out every couple of days so that we're not overwhelming it with just too much people with fanned out books. Appreciate you guys. Send me any requests, anything you want to know about, so we can dive deep into it. See if we can get you more data. But I want to give you as much as I can about the market so you understand what's driving what and what you can anticipate with the market going forward. We'll see. This is all new territory for all of us. We'll just see how it all comes out. Thank you.